Whenever we think about the future of real estate, the first instinct is usually uncertainty. People say housing is too expensive, the market is slowing, interest rates are high. How can anyone possibly succeed right now? But here's the truth. In investment, every single major shift in real estate has always created some of the biggest opportunities for those who were willing to think differently and take action when everyone else was too scared to move. Right now, we're witnessing one of those shifts. Look around. Remote work has changed the way people view home ownership. For decades, buyers crowded into major cities because jobs required physical presence. But now, people can work from almost anywhere. This means demand is spreading into smaller towns, suburban areas, and secondary markets that were once overlooked. Homes in those areas are still relatively affordable, yet they're appreciating faster than many urban centers. That alone creates an opening for investors who are paying attention to trends, not just headlines. At the same time, technology is rewriting how the entire industry operates. Just a few years ago, buying a house meant endless paperwork, countless showings, and uncertainty about whether the deal would even close. Today, you can take a full 3D tour online, get an instant AI-powered valuation, and soon, with blockchain, close on a property with more transparency and security than ever before. These innovations are lowering barriers to entry and speeding up the entire process. In other words, the real estate market is becoming more accessible than it has ever been. Investment. But here's where it gets even more interesting. The biggest opportunities are often found where nobody is looking. When the spotlight is on overpriced coastal cities or luxury developments, the smart money shifts toward undervalued rental markets, multifamily housing, or even specialized properties like student housing and short-term rentals. These areas may not be glamorous, but they generate steady income and are more resilient during downturns. It's about seeing what others miss, about recognizing value before it becomes obvious to everyone else. And let's not forget the bigger picture. Real estate is not just about flipping houses or riding short-term appreciation. It's about building long-term wealth. Even if prices dip, rents rise. Even if interest rates climb, demand for housing never disappears. People always need a place to live, which makes real estate one of the most reliable wealth building tools ever created. So yes, today's market might feel uncertain. Interest rates are high, affordability is stretched, and headlines scream about crashes. But if you step back, what's happening right now might be the greatest opportunity we've seen in decades. The future of real estate isn't about avoiding change. It's about understanding it, positioning yourself ahead of it, and using it to your advantage. Because while everyone else hesitates, the ones who act with knowledge and strategy are the ones who end up winning big. ChatGPT said shifts in housing demand are one of the most powerful forces shaping the future of real estate. X a good investment, and they're happening faster than most people realize. For decades, the rule of thumb was simple. The best opportunities were always in large cities because that's where the jobs were, that's where the schools were, and that's where people wanted to live. But the pandemic completely rewired how we think about location, convenience, and lifestyle, and the ripple effects of that shift are still being felt today. Remote and hybrid work models gave people the freedom to move out of expensive urban cores into more affordable areas without sacrificing income. And once people discovered they could get a larger home, a backyard, and a better quality of life for half the cost, the migration trend exploded. What we're seeing now is a redistribution of demand from a few concentrated metropolitan markets into suburban areas, secondary cities, and even small towns that had been stagnant for decades. This isn't just a temporary fad. It's a structural change in how people define value in housing. Affordability is at the heart of this shift. Investment. High interest rates and rising home prices have forced buyers to think creatively about where they can realistically live. A family that once stretched their budget to buy a 2-bedroom condo in a downtown area is now looking at a 4-bedroom house with a yard in a smaller city, where the cost of living is lower and the schools are often just as good. Millennials, who make up the largest share of home buyers today, are especially driving this demand. They value space, flexibility, investment, and affordability more than being locked into a city lifestyle that no longer guarantees higher wages. As they start families, they're fueling a wave of demand in areas that were previously overlooked, creating opportunities for investors and developers willing to pivot alongside them. Another important factor is lifestyle preference. People are prioritizing experiences, health, investment, and community over proximity to office towers. Demand for homes near parks, walking trails, and local amenities has spiked, while the appeal of cramped, high-cost apartments in dense urban centers has started to fade. And this doesn't mean cities are dead, but it does mean they need to evolve. Mixed-use developments that combine residential living with retail, co-working, investment, and social spaces are becoming more attractive because they blend convenience with lifestyle. Meanwhile, smaller markets that offer a balance of affordability and lifestyle, places with good schools, lower crime, and outdoor activities are growing at a pace we haven't seen in decades. Technology also plays a massive role in these shifts. Virtual tours, online listings, and remote closings have made it possible for people to shop for homes across the country without ever setting foot in the city they're buying in. This digital access has leveled the playing field, allowing buyers to discover opportunities in markets they may never have considered before. Investors are doing the same thing, identifying rental hotspots in areas where demand is surging due to these migration patterns. Everything of places like Austin, Boise, or Nashville, which exploded in popularity after years of being seen as secondary markets. The same story is now unfolding in dozens of other regions, and the early movers are reaping the benefits. Generational differences add another layer. Baby boomers are downsizing from larger suburban homes, creating inventory that younger buyers are snapping up. At the same time, Gen Z is entering the rental and ownership market with very different expectations. They want affordability, but also flexibility, which is why demand for rental properties built to rent communities and co-living arrangements is climbing. This generation is more comfortable moving around, working remotely, and prioritizing experiences over long-term commitments, investment, and that means the housing market must adapt to serve both stability-seeking families and flexibility seeking younger buyers. Taken together, these shifts in housing demand signal one of the greatest transformations the real estate industry has ever seen. Where people want to live, what they value in a home, and how they choose between buying and renting are all being redefined in real time. For those who understand these changes and act on them, investment, this is not a time to sit back. It's a time to recognize that the old playbook of chasing the hottest downtown properties no longer works the same way. Greatest opportunities lie in following where the demand is flowing. And right now, investment, it's flowing in directions that will surprise a lot of people who are still stuck thinking about real estate the old way. ChatGPT said, the role of technology in real estate is expanding so rapidly that it's transforming not only how people buy and sell homes, but also how the entire industry functions behind the scenes. Just a decade ago, a home search meant flipping through newspaper listings or driving around neighborhoods to spot for sale signs. Today, most people begin their journey online, scrolling through endless photos, detailed descriptions, investment, and price comparisons before they ever set foot in a property. The ability to access so much information upfront has shifted power into the hands of buyers and investors, and it's pushing the industry to adapt at lightning speed. What used to feel complicated and opaque is now becoming increasingly transparent, efficient, and data-driven. And that's opening the door for greater participation and opportunity. One of the most visible changes is the rise of virtual tours and 3D walkthroughs. These tools became a necessity during the pandemic when in-person showings were limited, but they've now evolved into an expectation. Buyers can tour dozens of homes from their couch, compare layouts, and get a real sense of space without ever leaving their living room. This has widened the pool of potential buyers for any property, since someone relocating from across the country can confidently make a decision without physically visiting. For sellers and agents, it means less wasted time showing homes to people who aren't truly interested. Investment. The efficiency created by this technology is already reshaping how fast transactions move, and it's only going to accelerate as these tools become more immersive and accessible. Artificial intelligence is also entering the real estate space in a big way. AI-powered valuation models can analyze thousands of comparable sales, neighborhood trends, and market conditions in seconds, often producing more accurate pricing estimates than traditional methods. For investors, investment, these tools are invaluable because they allow quicker identification of undervalued properties and better predictions of future growth. AI chatbots are even being used to handle inquiries, schedule showings, investment, and answer questions instantly, improving the customer experience while reducing overhead for real estate professionals. The data-driven precision of these tools is removing guesswork and helping both buyers and sellers make smarter, faster decisions. Another game-changing advancement is blockchain and smart contracts. Investment. Real estate transactions are notorious for being slow, filled with paperwork, middlemen, and delays. Blockchain has the potential to simplify this by creating a secure, transparent, best and tamper-proof way to transfer property ownership. Instead of waiting weeks for closing, buyers and sellers could execute transactions in a fraction of the time, with all terms recorded immutably on a digital ledger. Tokenization, a concept tied to blockchain, even allows real estate assets to be divided into smaller, tradable shares. Imagine being able to invest in a piece of a high-value property the same way you buy stocks. This could unlock new opportunities for small investors who previously couldn't afford to participate in larger real estate deals. The influence of big data cannot be overstated either. Companies are now tracking patterns such as population growth, job migration, and lifestyle preferences to predict where demand will surge next. For example, by analyzing remote work trends, data firms can forecast which suburban areas are about to experience a housing boom. Landlords are using predictive analytics to adjust rental pricing dynamically, maximizing income in ways that weren't possible before. Even city planners and developers are using technology to design smarter, more sustainable communities that align with shifting demand. These insights give those who embrace them a huge advantage. Investment, because real estate is no longer just about location. It's about anticipating the next location before everyone else catches on. The technological revolution is also changing how properties are managed after purchase. And smart home devices allow owners and renters to control everything from security systems to energy used from their phones, which not only improves convenience but also enhances property value. Property managers are integrating apps that allow tenants to pay rent, submit maintenance requests, and communicate directly with landlords, creating a seamless experience that attracts and retains tenants. For investors, this means better oversight of multiple properties with less manual effort, freeing up time to scale their portfolios. All of these advancements signal that real estate is moving toward greater accessibility, efficiency, and inclusivity. Barriers that once limited participation are being lowered, whether through online platforms that connect buyers and sellers directly, AI models that remove guesswork, or blockchain systems that simplify transactions. The winners in this new landscape will be the ones who adopt these tools early, because as technology continues to reshape the industry, the gap between those who embrace it and those who resist it will only widen. The future of real estate is no longer just about bricks and mortar. It's about how technology is redefining the rules of the game. Opportunities in undervalued markets are often where the greatest wealth in real estate is built. Yet they are also the areas most people tend to overlook. When buyers and investors hear about booming coastal cities or luxury developments, the instinct is to follow the crowd and chase the same hot properties everyone else is after. The problem with that strategy is simple. Once the market is already saturated with attention, prices have been driven up, and returns are often lower. The smarter play is to look at places that haven't yet hit the spotlight, the markets that are undervalued today, but show strong signs of growth tomorrow. These are the areas where patient investment, forward-thinking investors can step in early, secure properties at a fraction of the cost, and watch as demand and appreciation catch up. One of the biggest factors driving undervalued opportunities right now is migration. People are leaving high-cost cities not only because they're unaffordable, but also because remote work has made them unnecessary. A professional making the same salary doesn't have to live in San Francisco or New York anymore. They can move to a smaller city or suburban area where housing costs are lower and quality of life is higher. As this trend spreads, towns and secondary cities that once had stagnant growth are suddenly experiencing surging demand. This creates a sweet spot for investors, markets where property values haven't fully adjusted to the new wave of buyers, but rental demand is already climbing. Affordability is another key reason undervalued markets thrive. In many major cities, the cost of buying a home has priced out an entire generation of potential buyers, leaving renting as the only viable option. In contrast, undervalued markets still offer entry points that make sense for both homeowners and investors. For someone looking to build a portfolio, buying in these areas allows them to acquire multiple properties instead of sinking everything into a single overpriced home. With rents often rising faster than property prices in these regions, Cash flow potential is higher, making them especially attractive for long-term wealth building. Undervalued doesn't just mean geographic location. It can also mean property type, multifamily units, student housing, and even short-term rentals in vacation destinations often sit under the radar compared to single-family homes in established neighborhoods. Yet these niches can generate consistent returns even during uncertain times. Investment. Student housing, for instance, benefits from a steady flow of tenants, regardless of broader economic conditions, while short-term rentals can thrive in smaller cities with growing tourism that hasn't yet been fully tapped. Investors who diversify into these lesser-known segments often position themselves to outperform those who only focus on conventional markets. Another overlooked opportunity lies in areas undergoing revitalization. Cities investing in infrastructure, new businesses, or universities tend to create ripple effects in their housing markets. A new tech hub, improved transportation system, or growing healthcare facility can transform a struggling city into a hotspot almost overnight. The key is spotting these changes before they become mainstream knowledge. By the time major publications label a city as the next big thing, most of the easy money has already been made. But if you track development projects, population inflows, and job creation early, investment, you can get ahead of the curve and benefit from years of appreciation. There's also a psychological element to undervalued markets. Many investors shy away from them because they don't yet carry the reputation of being safe. But in reality, safety in real estate is less about name recognition and more about fundamentals. If a market shows strong population growth, job creation, and rising rental demand, it is inherently more stable than an overpriced city with declining affordability. It takes discipline and vision to invest where others aren't looking, but those who do often see outsized rewards when sentiment eventually catches up to the fundamentals. Ultimately, investment undervalued markets represent one of the greatest opportunities in real estate today because they combine affordability, growth potential, and resilience. They allow investors to acquire assets at lower prices, investment, generate stronger cash flow, and position themselves for appreciation that hasn't yet been priced in. While the majority continues to chase saturated markets with slim margins, investment. The real winners are those who pay attention to where people are moving, where jobs are being created, and where communities are quietly transforming. These are the places that hold the next wave of opportunity. Everything makes a good investment, and those who recognize it early will be the ones who build the kind of wealth that everyone else wishes they had spotted sooner. Investment, long-term wealth through real estate has always been one of the most reliable and proven strategies for building financial security. Yet many people underestimate its true potential because they focus too much on short-term market movements. When home prices dip or interest rates climb, the headlines tend to paint a picture of doom and gloom. But real estate has never been about quick wins. It's about steady, compounding growth over years and decades. Unlike stocks, which can swing wildly overnight based on a headline or quarterly earnings report, real estate operates on a slower cycle, one that rewards patience, consistency, and the ability to think beyond immediate conditions. For anyone serious about building generational wealth, real estate offers a balance of appreciation, cash flow, and tax advantages that few other assets can match. One of the biggest reasons real estate builds wealth long term is the power of leverage. Good investment. With relatively small amounts of capital, you can control assets worth several times more by using financing. This means that when a property appreciates, you're not just benefiting from growth on the money you put in, but on the entire value of the property. For example, a 10% appreciation on a 300,000 home doesn't just add a 10,000 to your equity. If you only invested a 30 Zlotys as a down payment, it effectively triples your return on the cash you invested over time. This compounding effect accelerates wealth building in a way that simply saving or investing in other vehicles often cannot replicate. At the same time, real estate generates income through rental cash flow, and that steady stream of income can either supplement your lifestyle or be reinvested to expand your portfolio. Unlike many other investments that rely solely on appreciation to produce returns, real estate can pay you consistently month after month, regardless of whether property values are temporarily rising or falling. As rents increase over time, driven by inflation and growing demand, the income potential only becomes stronger. For those who think in decades, investment. This combination of appreciation and cash flow creates a powerful engine for financial independence. Another overlooked benefit is the tax structure that favors real estate investors. Through deductions for mortgage interest, property taxes, depreciation, and maintenance expenses, investors can often shelter much of their rental income from taxation. In addition, strategies like 1031 exchanges allow investors to defer capital gains taxes by rolling profits into new properties, further compounding their wealth without the drag of immediate taxation. And these advantages make real estate not only a wealth building vehicle, but also a highly efficient one compared to other investments. Real estate also provides something intangible but incredibly valuable: stability. People will always need a place to live, regardless of economic cycles. This consistent demand gives real estate a resilience that protects investors during downturns. Even in markets where prices decline, investment rental demand tends to remain strong, and in some cases, it even grows as fewer people are able to buy homes. This safety net ensures that investors who hold properties for the long term are far less vulnerable to temporary shocks compared to those chasing speculative gains in volatile markets. Perhaps most importantly, real estate has the unique ability to build generational wealth. A property purchased today doesn't just serve as an investment for the buyer. It can become an asset that provides security, income, and opportunities for children and grandchildren. Unlike many other investments, which can be abstract or fleeting, real estate is tangible. It's land, it's a building, it's something that carries intrinsic value no matter what happens in the broader economy. Families that understand this tend to create lasting legacies, passing down assets that not only grow in value, but also provide shelter and income across generations. In the end, investment. The true wealth building power of real estate lies not in trying to time the market or chase the hottest trend, but in staying consistent, focusing on fundamentals, and letting time do the heavy lifting. Property values rise and fall in the short term, but over the long horizon, the trajectory has always been upward. Rents continue to grow, debt gets paid down, and equity compounds. Those who are willing to think in decades instead of months are the ones who ultimately unlock the full potential of real estate investment, turning what might seem like a simple property purchase into a foundation for lasting financial freedom.